Hey there traders, welcome to this weekend's free video from thestockbandit.com. I am Jeff White and I'm glad that you've joined me. We had an interesting week last week. We had the government shutdown kicking in and the beginning of the fourth quarter, and so kind of a handful of cross currents. This is still a very news-driven, headline-sensitive market, and we're still getting some kind of mixed signals depending on the index that you're looking at. We've seen pretty steady pullbacks in the S&P and the Dow, although there is a silver lining there. We'll get to those in a moment. We've also seen the Russell and the NASDAQ hold up pretty well as kind of the smaller cap, higher beta, more speculative names continue to attract money. Now, one of the issues out there right now is kind of this idea of performance anxiety. Now, if you kind of Google fund manager underperformance, you'll notice that statistically most fund managers fail to beat the benchmark, and in many cases that's the S&P 500. And what happens is, as the year drags on and we get later and later into the year, those fund managers understand that their assets are going to disappear. The assets under management will disappear and go somewhere else with better performance if they don't make up for the difference. And so what happens is they tend to kind of chase the hot money and chase the hot stocks and kind of disregard risk a little bit in hopes of making up some of that underperformance. And so as the fourth quarter drags on, that's typically what we tend to see, and it seems to be that's partially driving the price action of late. So let's take a look at the indices here. It's just a good place to kick off the trading week, understanding where we've been, what's going on out there, what are the key levels, because we know this is going to help influence how individual stocks move, and that's where the best opportunities will lie. So for the NASDAQ, we've got the short-term highs right up here. Those are at 38.19, and we're sitting just beneath that as of Friday's close. Last week, this index actually gained 26 points. So, it kind of shrugged off the government shutdown, no big deal there. We've got this prior high, which continues to serve as kind of a support zone. It's still well below current prices, but that's at 36.94, and so those are kind of the two big levels for this index. Right now we're kind of holding this short-term breakout. That was right here through this 37.98 level, and so we're just barely above that. We've closed above it 3 of the last 4 sessions. We had a little bit of a hiccup on Thursday, but recovered it again on Friday. So we'll see how this pans out. But overall, the uptrend remains intact. This index has been putting in some lateral price action. So the stage is set for a possible continuation here. It's just going to be a matter of, can the bulls produce it? Moving on to the S&P 500, I've noted this 1671 level a number of times here, and last week it came into play. We tested it on Thursday as well as Monday. We got down to 1674 and change on Monday. We undercut 1671 by less than a point on Thursday, and then we bounced some 19 points into the close on Friday. So on a net basis, the S&P only gave up a single point. This was the close from the prior week. That was at 1691. So essentially it was a flat week here for the S&P. But the biggest thing here is this idea of higher lows. Now, this may be carving out a higher low here to maintain this kind of longer-term uptrend, which is still intact. And you can just keep going back and drawing these intermediate-term higher lows. They're very evident on the chart. And it could be that this 1671 level just held and may be confirmed pretty soon as another higher low. Now, what we'll need to see now is a little bit of upside follow-through, and that's something that's been lacking for the last few weeks, coming off of the September high of the 19th. We've not seen 2 advancing days in a row. There's a single up day there, a single one here, and then another one on Friday. So it's just going to be a matter of, can we see the bulls kind of get in gear? And if they do, I would expect to see a pretty aggressive move back toward the recent highs. That's up here at 1729. This prior high right here, 1709, and then again 1671. Those are the key levels there for the S&P 500. The Russell 2000 continues to just impress, for lack of a better word. This index was up just 4 points last week. Not a lot. It's certainly been moving mostly laterally here of late, but this 1063 level had been the prior high, and it's been tested a couple times lately, and it has held on a closing basis as support. So now we've lifted a little bit from there, and then of course we've got this short-term high right up here That's at 1087. So a couple of levels there for the Russell. And then let's take a quick look here at the Dow. This index has given up considerable ground after this little failed breakout attempt. This was, you'll recall, the Fed day on September 18th, where we spiked higher and cleared the highs, made a new all-time high, and since then it's just been a matter of very steady channeling price action to the downside. Here again, no two-day advances, as each little bounce has only been a single day event. But for the Dow, it has held above this 14,760. That's the prior pullback low from late August, early September, and then we've got now the potential for a higher low. But here again, we're going to need to turn back up and start working back toward this 15,400 level. That's a key level, and we've got this 15,600 area as well. One more chart to take a look at here is the VIX. This is the volatility index. Obviously, I've seen a pretty good lift here off this 12-13 key support zone that it's tested so many times this year, but it's still lingering well below the 20 level. So last week it got to 1871 on Thursday before backing off again on Friday, finishing south of 17. So volatility continues to ebb and flow, and really there's no real indications here of any extremes at all. There's no real fear out there. It's pretty high level of complacency still out there in the market. And so as volatility contracts, we can expect that to correspond with rising prices in equity. So we'll keep a close eye on all of these situations as this is continually developing, as it always is. Thanks again for joining me for this video. If you're looking for some trade ideas to add to your own, stop by the site at thestockbandit.com. We do offer a free trial. You can check it out, kick the tires, see what we're all about. And if it's a fit, great. Other than that, I will be back soon with more videos, but until then, trade like a bandit.